What's up, guys, and welcome back to the channel. I am your host, Eric. I go by 360, and this is the 360 Crypto channel. As always, guys, thank you guys for being here. Strength in number, we are stronger together. And don't forget to subscribe, smash that like button. In today's video, we're gonna go talk about the market. We're gonna talk about Bitcoin. We're gonna talk about FIFA partnering up with a blockchain company, and pretty much just talk about Bitcoin in general and Ethereum and where the market stands. I'm trying to get a better habit of doing these videos. Hopefully one day I'll become an influencer in this space. And again, guys, I'm here to show you guys. So anything I do in my channel is for financial freedom that we're trying to reach. And again, it's all education purpose. I'm not a financial advisor. It's always good to learn and listen to others people's perspective view. Let's go ahead and get to the video. All right, guys, as always, if you guys get a chance, go ahead and subscribe to my Instagram, 360 Crypto. I do repost other posts from cryptocurrencies, blogs, or Instagrams. So if you guys can follow me, appreciate it. Now we're gonna look into the bubbles. And as we look into the bubble, it is completely red. Now, what does that mean? Completely red. The market is crashing. There's a lot of fear in the market. Most people that bought Bitcoin at 40, 60, 55, they're currently down maybe 20 to 40 to 50%. Bitcoin right now is currently down 50% from its all-time high. But to be honest with you, Bitcoin is still at 30,000. I have not seen Bitcoin at 30,000 hold this position longer than 4-6 months. When I got in 2017, towards the end, when it hit up 24,000, the next following year in 2018 became a bear market. To see Bitcoin even hit 10,000 again, it took months. It was sitting 6,000, 7,000, 5,000, 8,000, back to 4,000, and you know, that's how I accumulated my 2 Bitcoin. And again, guys, do I hold those 2 Bitcoins? No, you can check out the previous video and explain what happened. Again, guys, when you're in this market, right now is a good time to dollar cost average. You have a lot of good coins that are gonna hit their all-time highs again. You have Cardano sitting at 67 cents. Will it hit $1? It will. It's down for the month 35%, for the year 60%. That's fine. Put what you're willing to lose in this market right now. So if you have $100 and you want to throw it in, hey, throw $100. A lot of good coins right now that you should be dollar cost averaging, which I am doing too. Now, I don't buy a big amounts because I do have a personal debt that I'm trying to pay off. But when I do buy Bitcoin or any other altcoins, I make sure that I dollar cost average into those coins that are lower than the amount when I got in. So for instance, EOS, I was buying it at $10. So if I see EOS right here, EOS is currently at 179. So right now, my position, I would be buying $10, $20, $30 to balance out what I'm already down. So again, guys, dollar cost average into the market. If you don't have a lot of money to spend, then pick and choose your coins. CRO is not going nowhere. Crypto.com arena is going to be there for a while. So that coin would be a perfect coin to be buying into. You have other coins too that I'm not too aware of. That's a good one. Mana's a good one. KuCoin's another good one. Solana, here's EOS, Luna, Litecoin, Bitcoin, obviously, Ethereum. CRO is sitting at 20 cents, guys. That coin already hit $1. So $100 that you're willing to put into the market, this would be a good start off point, right? Now, moving on to the fear and index. Right now, the fear index, it is 10. Well, a lot of people are not trying to buy any cryptocurrencies because they don't know if the market is going to keep tanking. To be honest with you, what I've learned is, and I've heard this, you might have heard this, when others are fearful, be greedy. And when others are greedy, be fearful. Because if we're in the green, everybody's trying to buy, you know? That's when you can sell off your coins that you bought when you're in fearful. So if you buy $1,000 worth of CRO when it's fearful and the market starts pumping again and we go into a greed, you can sell all those coins that people are being greedy about. So we're at 10 and it's only getting worse. Again, guys, we are getting into a recession. I hope everyone has good, stable jobs that can live out this recession. The inflation rate is going up, but if you don't have enough money to invest, then start little by little. We go to the asset ranks. You still have gold sitting in the top. You have Apple at number 2, and you have the Saudi, which is the oil company, sitting at number 3, Microsoft at number 4, Google at number 5, silver at number 6, Amazon at number 7, Tesla at number 8, and you have Bitcoin at number 9, and then you have the Berkshire Hathaway company, which is the Warren Buffett company, sitting at number 10. Again, guys, you have a big cryptocurrency like Bitcoin sitting in the top 10. It's only a matter of time till we see it in the top 5. When? I don't know. I don't play the market. I don't have enough money to be dumping like that, but I have enough money to put in little by little, 20, 30, 100, 20, 30, 100. So when we look at the Bitcoin timeline history, not really much good news came out. The only thing is El Salvador did buy the dip. They bought 500 Bitcoins, I think about like 3,100. The dip already passed, guys. So if you missed the dip at 30,000, you can still buy right now, you know, and dollar cost average your way in, because we're not sitting at 40,000. We're not sitting at 45,000. We're not sitting at 50,000. We're sitting at 32,421 as of right now. So again, guys, dollar cost average your way in. Let's see what Twitter has to say, right? Twitter, again, guys, don't use it for investment knowledge. Use it as a tool for you to do your own research. And as always, there's always going to be, I seen it earlier right here. So here it is. Bringing it back to El Salvador. El Salvador just bought the dip, 500 coins at an average of USD of $30,744. So they bought the dip. They timed it perfectly. Next thing, where did I see it? Right here. Everyone bought the Bitcoin dip. Did you? Maybe you didn't. Maybe you did. I did. I bought at 31, and then I bought at 30, somewhere around there too. And it wasn't a lot. It was just 30 bucks. So, which I'll add into my bigger portfolio of Bitcoin. And again, just dollar cost average to try to acquire that one Bitcoin. But I seen earlier right here was Bitcoin is dead. You know how many times Bitcoin is dead been called out since I've been in the market? Several times, guys. Bitcoin, Ethereum, the market is crashing. Right now, the market is sitting at $1.48 trillion. It is down 3.59%. And over the last day, there's still a lot of money in the market for this to go even to zero. Bitcoin's still number 1. You still have Ethereum number 2. You have BNB at number 4 and XRP at number 6. Solana at number 7. So again, guys, buy the dip, buy what you can afford, and build those bags. Now, as we move on, before I'm gonna show you guys these 2 videos, Algorand just partnered up with FIFA. What does that mean? Well, FIFA is well known for soccer, the World Cup, etc., right? They have now partnered up with Algorand to pretty much be one of their sponsors and also to build on their network. And when this happened was, well, you got a healthy bull run, right? You got Algorand going from 75 cents up to $1. So Algorand, let's see where it's currently sitting at. So Algorand is sitting at the 27th coin. Now, 64 cents, this is a good entry point. When you go to the all, the highest it's hit is $2. So again, this is a good entry point if you want to put $100 in and you believe Algorand is doing the right moves and it's a long-term portfolio. If you're a trader, then you gotta know what you'll be doing to trade in this space. But again, if you're a holder like me, Algorand, this would be a good entry point at 64 cents for you to hold for 2 to 3 months, maybe up to a year. Again, guys, things don't happen overnight. It takes for you to build. Like I did, it took me 4 years to build that portfolio, which I'm mad that I lost that portfolio, but live and learn. I'll grow the next portfolio in the next 4 years again. All right, last thing that I want to show you guys, I want to show you these 2 videos of Mr. Pump himself. And it goes over the same thing I've been talking about, dollar cost average. And it talks about when people are fearful, then you be greedy. And when people are greedy, then you be fearful. So we're going to go and look at these videos.
Do the DCA into Bitcoin stocks or build a cash position? This is a very interesting question. The first answer is I don't give financial advice. Every single person, your individual situation is going to dictate what you should do. So things to consider. 1, how much cash do you currently have? 2, what's your current portfolio look like? 3 is what are you optimizing for? And what are you optimizing for is going to really depend on how old you are, what your current employment situation is, what are your expenses, all that type of stuff. And then the last thing I think is like, what do you want or what makes you happy in life? So you take those 4 things into consideration. What my guess is in an overarching way, what many people are going to end up with is you're going to need some sort of cash position that can last in case something bad happens. It's all fun and games and people are like, oh, damn, it's real bad when people are getting fired until you get fired. And then you're like, shit, I don't have any income. What am I going to do? So my guess is that people are going to try to get at first 1 month of kind of monthly expenses sitting in the bank. And they're going to try to get to 3 months, maybe even 6 months. It's a big number, but there's a lot of people who try to get to that. So Cash position, think of that as your rainy day fund. God forbid something goes wrong. You know that I'm good for 3 to 6 months. Then what people are going to start to say is, okay, that's my defensive position. I got cash sitting on the sidelines that I know that I'm good regardless of what happens at work, etc. My offensive mentality or my offensive playbook, I got to start thinking about how am I going to deploy my excess cash. So I use easy numbers. Let's just say that I needed $100 for my rainy day fund. Takes me a month or two. Okay, I can save up. Bam, I got it. I already had some cash plus extra. I'm good now. Let's just say that gives me 3 months of my rainy day fund. I put it there. I don't touch it. I don't care how high inflation is. I don't care because I know that that's going to make sure I'm good. On offense, what a lot of people will do is they'll sit there and be like, oh, stuff's going lower. It's going lower. It's going lower. I'm going to wait to buy it lower. I'm going to wait to buy it lower. Maybe. Or maybe this is the bottom. Maybe. I don't know. I'm not trying to time markets. All I know is that when prices go up in any asset class, whether that would be real estate, commodities, stocks, Bitcoin, crypto, whatever, dollar cost average in, dollar cost average in, dollar cost average in. But when prices fall, I still think of it as dollar cost average in, dollar cost average in. I just may do it on an accelerated timeline. So an example of that would be, okay, if I was going to make a purchase of Bitcoin, right? I'm talking about myself personally again, not financial advice. If I was going to make purchases of Bitcoin every other week, now maybe what I'll do is I'll do it every week, or maybe I'll do it every couple of days. And the thought process here is like, you use Bitcoin as the asset. 40,000 was at the bottom? Well, obviously not. Now we're down at 35, 36,000. Is that the bottom? I don't know. Maybe it goes to 30. Maybe it doesn't. I don't know. But instead, what I'm going to try to do is anywhere that is lower than where I was buying a couple of months ago, probably a pretty good decision. And so ultimately what they're going to end up doing is people are going to start to just dollar cost average into these assets. And so I think that's really the way that most people try to do this. And so Andy Juan, I think is how you say it. He said opinion on trying to catch a falling knife versus DCA on the way down, I think is another way to think about this as well, is you can go ahead and as you're dollar cost averaging, if let's say, for example, Bitcoin goes to some really, really low number, right? I don't know, $1,000. Let's use this super extreme. No way that's going to happen. But let's just say that occurred. If you were started buying at $35,000 and you were dollar cost averaging on your way down, you basically were quote unquote catching a falling knife. But at the same time, if you're dollar cost averaging into an asset and it ends up bottoming at 35,000, then you were quote unquote buying the bottom. The problem is that nobody has a crystal ball. You can't see in the future. So I tend to think that if you have conviction in any asset, commodity, real estate, stocks, crypto, whatever, and it has volatility to it, you're best off simply just dollar cost averaging. Now, that requires that one, you got the cash position, right? So that you're able to actually weather any sort of financial hardship in your personal life. The second thing is that you have the excess cash flow on top of the rainy day fund to be able to invest. And then the third thing is that you got a long time horizon. So what you can't do is if you're somebody who's got high leverage, right? Let's say that you had some Bitcoin, you levered it up, you bought more Bitcoin, you did all this stuff. Now all of a sudden it's a little scary because you may become a forced seller. So a lot of times what ends up occurring, and this is true of all asset classes, I talk to every single one of the best investors in the world for the most part. What ends up being a telltale kind of story or a common story is that investors, when they're young and when they're first starting out, it's all about how high can it go, how rich can I get, how much money can I make in this trade, in this investment, or in this strategy. As they build wealth, it becomes less about how much can I make, and it becomes much more about how can I be sure that I'm durable through good times and bad times. Now, they have the benefit of they've got a cash position to be able to think that way, or an investment portfolio to think that way. But the second thing that's really important is that they also, as they build their wealth, they get experience. And so you see right now, there's a lot of venture capitalists, there's a lot of stock market investors, et cetera, all talking on Twitter about, hey, the 2008 financial crisis or the 2001 tech bust, et cetera. Sure. But there's a lot of folks who are investors right now who never lived through that stuff. They didn't have investment portfolios in 2008 or 2001, 2000, whatever. So when you start to see that, what you got to ask yourself is, what is the experience I'm going to get right now? And a lot of people are going to learn that you have to be durable. And so you can still go for the super asymmetric investment, but you got to have that durability. Without that durability, there ends up being a pretty big problem.
Again, guys, he explains it really well. Dollar cost average. You know, if you've never been in this market that is down, you have to get used to it. You know, it's like you do anything, you get better at it as you're in it. So he says it really best. That's why I pulled up this video. I'm gonna pull up some charts now from Telegram. All right, guys, just to let you know, I am in a group that I did pay for years ago when I first got in. He was giving out the lifetime, so I'm in his group. Go and see what he says. So right here, he actually shows a chart of Bitcoin right on the support line from July of 2020 and 21. And as we predicted, he predicted it did bounce. Bitcoin went out to 30, bounce, and Bitcoin is currently sitting at 32. So it did bounce. So as you can see, the bottom was 30,000 with 91. And it just bounced back up $2,000. So if you bought at the bottom, congratulations, you are in the positive. Now going back, he says right here, buy at 30,000, stop loss at 29. This is for my traders. If you know these terminologies, you take at the first 33 and then you take at 34. So looks like Bitcoin is rebounding now. Another, Terra Luna lost 55% in the last 24 hours. And the reason why is because the USDT Tether coin that it's linked up to kind of got botched too because of Bitcoin. Here's another chart. Tether, they thought it was gonna bounce. It's under, currently right now, if you're in Terra Luna, $28 is a good pickup. Under $100 is really good. Now this is a chart that El Salvador's been buying. Honestly, this is pretty messed up calling him a noob. He's not a noob. He's buying the dip when he wants to buy the dip. So his overall cost average is $28,000 per coin since he's been buying. He's bought at 46, he's bought at 46.8, 46.3, 43, 58, 54, 48, 49, 36, and 30. Now, he made up for most of these coins. Like Palm says, we don't know where is the bottom at. You just dollar cost average wherever you want to get in. That's it. I got this one last video that I want to show you.
Over the last 2 years, we saw a raging bull market. Asset prices went to the moon as the Fed stepped in and were dropping monetary stimulus all over the market. But of course, starting in November of last year, the Federal Reserve, they started talking about quantitative tightening. They said they were going to raise interest rates, and they were going to take that persistent bid that they had been presenting to the market. They were going to remove it. All of a sudden, asset prices went into a free fall, and we have just seen down only since November. Bitcoin obviously down about 50%. But it had already gone down 50%. It hit that mark back in January. There was a little bit of a relief rally, Bitcoin going up around $45,000. But here we find ourselves back again in the low 30,000s, and Bitcoin 50% off that all-time high of $69,000 back in November. Now, why exactly is this so important? Well, it's because investors are horrible at controlling their emotions. If we take a look at something like the Fear and Greed Index, right now it's showing 11. There's fear everywhere. Now, this is fascinating to think about because at $33,000 to have an 11 on the Fear and Greed scale means that there's tons and tons of people. They're really nervous. They don't know what that uncertain future looks like. And so naturally, they're capitulating. But the last time that we hit 33,000, when we went on the way up back at the beginning of 2021, the Fear and Greed Index showed massive greed all over the place. Same price, this time fearful, last time greedy. Now, all that tells us is that perception is everything. It's the same asset and it's the same price for the asset. It's all just relative comparisons to where the asset has been and where people think that it's going. Now, ultimately, when things get good, people get overexcited. They tend to think that it's only going to get better. And when things get bad, they tend to get overly scared and they tend to think it's going to get way worse than it actually does. I don't know the future any more than anyone else, but what I do know is that one of the key ingredients to being a great investor over long periods of time is to learn to control your emotions. It's never as good as it seems. It's never as bad as it seems. And as the old saying goes, this too shall pass. Now, ultimately, as we see fear everywhere, that doesn't necessarily mean that we're at the bottom of the market. But what it does tell us is that usually, if you go ahead and you buy assets when everyone else is fearful, and they're good assets, and they're assets that you can hold for decades to come, it usually has a great payoff along with it. Now, naturally, being a contrarian is hard. Humans are sheep. They go with the crowd. Right now, the crowd is telling you Bitcoin, stocks, and other assets, they're going down forever. I don't think that's necessarily what's going to happen. I don't try to time markets, but what I do know is if you can find those great assets and you can hold them for a long period of time, The more people get fearful, the better off you're probably going to be. If you've got cash and liquidity and you start to buy in the market, it'll be fascinating to see how the future plays out. The fear index at 11, that's pretty damn low. So let's see what happens. But ultimately, when there's blood in the streets, it's usually a good time to start getting excited.